Welcome to the DeFinity Market Strategy. I'm Paul Rodriguez of ThinkTrading.com, and I'm here with Manu Choudhary, who's the CEO of DMA Link and the co-founder of DeFinity. So, volatility in the markets, we've got volatility politically. What's your take on things?
Yeah, look, the first thing I guess I want to say is that I got it wrong last week. I called it completely wrong, and effectively not necessarily the markets. I think my take on the markets, I think our view on the markets was actually pretty correct. It was a bit of a nothing burger. We saw a bit of a sell-off, and then people bought the low tick, and we had a good old bounce, which is kind of as I expected. But I think if you look at the logic that I thought was being used by Putin to justify why he'd gone into the Donbass region, it was about him protecting ethnic Russians, about him essentially stopping a genocide, which was actually going on. That, I think, gave him the moral high ground, and that gave him some degree of moral justification for what he did. He then subsequently, after we recorded the video, decided to continue rolling the tanks in all the way to Odessa in the south and to Kiev in the north. And quite frankly, there is no justification for doing this whatsoever. And he has lost any moral rationale, rhyme, or reason for entering into the eastern portion in the first place now, I think. So what I kind of thought would be the case would be a little bit of a copy-paste from 2014, where you saw the annexation of Crimea. It was a lot of political wailing and gnashing of teeth for about a week, 10 days, and then it all died down and everyone kind of forgot about it. Russia got sanctioned and the world moved on. This, unfortunately, is different. I presume this was going to be a short-scale incursion into the east of Ukraine to protect, again, those that were ethnically Russian. And that has happened, but that's also been followed with a full-scale military invasion of the rest of Ukraine. So I think, unfortunately, what this means is that this is going to be longer term than I expected. And I think that this is going to, I think, probably weigh to a certain extent on a lot of assets. And we've kind of seen that already, certainly with the slight correction we've seen. Although arguably, maybe the move in Bitcoin was more down to Jerome Powell's comments about regulation of crypto rather than people thinking this could be more protracted. I don't know. We need to see how this plays out, really. But that's, I suppose, the first thing I wanted to say. So, I put my hands up. I was wrong. I made an error. And sadly, I don't have a crystal ball, so I don't get it right all the time. But yeah, this has turned into a slightly more concerning situation. On the more positive note, the Canadian truckers that were besieging Justin Trudeau, one of my favorite world leaders, right up there with Jacinta Ardern and Boris Johnson. Good wholesome folk, of course. All right. He has caved in to the truckers, and he's rolled back the emergency powers. And what he said, he's rolled them back because he's realized actually he has enough political ammo to deal with them with the existing legal framework. The truth behind the matter is that when he decided to start freezing people's accounts that were just making donations, these were just donations of $50, $100. When he started basically freezing their accounts, other Canadians thought, oh shit, well, what if he does that to my bank account, and started withdrawing cash? Exactly. Justin Trudeau gets a phone call from several Canadian banks saying, we're beginning to see the start of a run on our bank. So you need to end this ASAP. And that's why it ended. Wow. So look, all I can say is that the power of the people is much greater than the people in power. And I forget who said that, but what a wonderful way to express it. They have won for the time being. However, all I would say is don't let fear cloud your judgment and let you give away your freedom, because sadly that is kind of still on the agenda and that's still on the cards. So be wary of this. It is all I'd say. I guess the other positive news I think this week was the city of Lugano in Switzerland has made a Bitcoin legal tender. Weirdly, they've also made USDT legal tender. Not sure why USDT, and their own coin LVGA, which I remember back in the days of having the old interlaced monitors. You had VGA, Super VGA, LVGA. Is that one of them? I don't know. But yeah, interesting move. And again, one step further forward for really making, I think, Bitcoin more mainstream. And really that was kind of, I guess, most of the news. Again, most of it's been geopolitically dominated, I guess, with what's going on. So maybe worth looking at the markets now, really.
Yeah, sure. I just want a couple of follow-up questions.
Sure.
I think what you were saying last week, from the way I read it, this is what Russia should, inverted commas, have done, and they've overreached. So that was a strategic error on their part, and they're going to face further sanctions and consequences for doing this. So strategically, they may have misstepped. What now? I know obviously it's really uncertain, but do you have any view on how it might play out from here? And I know it's a difficult question, but I mean, have they
Given
gone?
I called it wrong completely
Well, no.
last week, I don't know. I mean,
Well,
look, I don't know. I'm hopeful. I'm hopeful that we have a peaceful resolution. I'm hopeful we can get them around a negotiation table and just end this. That's kind of what the optimist within me is looking for. The realist, unfortunately, if you look at how this is being certainly portrayed in the Western media, Putin is the bad guy. And yeah, look, you know what? He ain't the good guy. I can guarantee you he definitely ain't the good guy. But I don't necessarily think that there is just one bad guy. And it's such a complex situation.
yeah.
It is Ukraine is such politically, geographically is a very important piece of this game of chess that we're seeing being played between the Russians and the Western powers, namely the United States. So it's difficult to call, but I really don't know. I think there's two scenarios. One is we have a peaceful resolution very soon, which is what I hope happens. The second is that this unfortunately is something that goes on for some period of time, and that is not good, because this will obviously, it's like anything, unfortunately when governments decide to do stuff like this, and they start wars, the people that suffer are those that are the poorest in society, the women, the children, the men that effectively made to fight these wars that their governments have deemed fit for purpose. So I don't know, that my prediction is that I need to see more evidence of there actually being some kind of peace process. And at the moment, all we're doing is we're seeing people like Joe Biden go to Congress to raise $10 billion to buy weapons to send to Ukraine.
Yeah.
That's probably not going to help in the peace process, I don't think. And in fact, I think he had some crazy idea of sending an additional $22 billion on top of that to help them buy some extra weapons. So look, I'm not sure how this plays out. I think this could unfortunately maybe be something that becomes a medium-term issue. And what the following consequences for this? I mean, if you look at what happened to the ruble sold off 20%. It's corrected slightly now, but we're still at 15, 20-year highs in terms of dollar ruble. I've been told by a very good source that what this potentially means is we might see domestically, certainly within Russia, a gold-backed ruble. So, i.e., a gold standard, so full conversion or convertibility from ruble to gold to stabilize the prices into domestically. How this works internationally, I don't know. I don't think it can, but that's I think probably an interesting remedy to what will create a huge run of the currency moving forward. But other than that, how this plays out in the rest of Europe, I don't know. But I think it's going to be a bit of a major issue, and I think it's going to damage the recovery, the tenuous recovery we're seeing anyway, and that's not good. One thing that I'm slightly alarmed by is I was expecting Jerome Powell to fully cancel the rate hike for March, but instead he looks like he's probably going to reduce it to maybe 25 basis points in spite of what's going on. So he hasn't quite admitted defeat in his hiking cycle, which is a nonsense to begin with, but I think he will do at some point soon.
Yeah, and that was something that we talked about very early on, even that the markets had got too far ahead with their expectations of rate rises. You also mentioned that Jerome Powell had made some comments about Bitcoin. What were those?
So he talked about, not specifically Bitcoin, more crypto. He was talking about regulation of the crypto market. So we got to about 44,500, which I thought, well, okay, good, which is positive. And then suddenly Jerome Powell came out and made the comments about crypto regulation, and effectively we saw a bit of a dip. And then he saw a whole bunch of other people come out of the political woodwork and make comments about making sure that we had regulations appropriate for ensuring that Russia didn't circumvent sanctions. Now the reality is, again, Bitcoin is the most trackable asset in the world. It's very easy to work out who people are sending Bitcoin to, who's receiving it, and who's transacting. So you don't need regulation. If you want to track and trace these people, it's already very easy. You just use the existing infrastructure. But yeah, so that did cause a bit of a correction, which was slightly concerning. And now you've seen Bitcoin move into a bit more of a consolidation phase. So I hope it stays where it is. I hope it keeps it keeps momentum, but the longer it consolidates for, the more concerned I'd be that there may be a deeper correction.
Yes, absolutely. That's very good point. So let's jump over to the charts. If we start off with the Russian ruble, which, as you quite rightly said, this is a big devaluation, and the trend is to the upside. So we got an attempted breakout in 2016 here, and it's been hitting these highs around 85. and stopping. But this is a big build-up of pressure, massive ascending triangle. So the market was anticipating this, and we're going to have a look at some of the commodity markets, which, as you rightly said last week, Manu, they are affected by the fertilizer products that are made in Ukraine, and therefore the agriculture costs have just gone through the roof. So this is a chart of corn futures broken into a new high, accelerating price action. So this is normally associated with the ending of a trend. So when the market gets, overly excited, it doesn't mean you can short it, because it can still go a long way. But when you get this panic phase, it's usually near the end of prices. And also watch out for, food prices generally going up, beer prices and rice prices, soy futures, etc. It's like everything seems to be going up. A little bit of a correction short term, but these trends are really aggressive. So I think we'll probably see signs, funnily enough, of a reversal of the crisis when these food prices start to turn down. I mean, certainly we would see it in the prices of oil. So oil, I think, needs to correct. So I think energy prices are probably at a short-term peak. So we'll see a correction. But bigger picture, it looks like the trend is going to be going up. So that kind of confirms what you're saying there, Manu, is it looks like it's going to be a medium-term problem. And, oil prices are going to continue to go up, but they have spiked in the short term. So we've got energy prices going up. We've got food prices going up. That's a big inflationary problem. The equity markets had a fantastic bounce, very close in the NASDAQ to our 38.2 retracement level. So we were talking about that as a bounce point where it should turn around. It's done the bounce. Now the question is, can it be sustained? And I talked about this in the weekly. We've got a trend line here, which just popped over, but not enough to conclusively break it. We've also got this resistance point here at 14,450, and it really needs to get back over that before we can start talking about a bigger recovery. And really, it would have to break this 15,185 for it to be conclusive and back into a potential very strong rally. So, if it can do that, the trend will be back up. But I don't think we're going to go with that strategy for now. I think it's better to be cautious. Now, there could be an extended sort of consolidation, given that interest rates are most likely not going up, as we've talked about for some time. And the US bond markets have sort of come round to that point of view. So given that there's a crisis on, you have to buy government bonds. I mean, government bonds are a safe haven. So piling into them would make sense from an international perspective. And although the trend has been bullish and we were consolidating around this key level, it did break it, and it looked at one stage like it was going to surge, but there's just too much pressure, too much buying pressure. So I think this is going to come down and potentially break this trend line now. I mean, at the moment, it's above the trend line. So technically, we can't be fully sort of bearish on yields and bullish on bonds until it goes. But it looks like we're going to see a bigger correction, basically because of everything that you mentioned, Manu. And, there's where else are you going to put your money? If stock markets are falling, gold, we're going to have a look at a moment. Gold is an interesting area, but I think in a crisis, gold is difficult to buy because you may see international selling. So the Russians might start selling their gold. Individuals who have gold are going to be desperate for cash, especially in the war-torn areas. And, other people are going to be looking at how liquid they are and how able they are to move around. I think that all points to more upside for cryptocurrencies. But overall, the US dollar is still in this upward trend. So we hit this 97, 72, 75 area. That was a very long-term target. We've been talking about that since last year. And the question here is, will it continue towards 100? So I think this has broken it enough to suggest that it will. I don't think it'll be a straight line because, as I say, when the Fed announced that rates aren't going up as much, or, they have already intimated that, they may even not raise by 25. Now, I think they will raise by 25, but that could be in doubt, potentially. But certainly all the way down the curve, the interest rate support that the dollar had before is gone or is going. And the only thing that's driving it is the fact that it's a safe haven currency. If you look at the dollar against the Swiss franc, it's completely locked together. So I would buy either the Swiss franc, the dollar, or the Japanese yen usually in a crisis. Maybe the Swiss franc would be a better currency, but for the moment, the dollar is acting as a safe haven refuge, especially given the way the Russian ruble is moving. So funds are going in. So what about gold? So we like gold long term. We think gold is a great investment long term, but will it continue higher in the short term? Well, this was the spike high. So we've got the high print. This was the panic high. And yes, the market's coming back up. And yes, it could still break it. But I think this should be much higher. I think that this trend, whilst it was a good trend breakout, and we called this breakout from this resistance line, I think I don't like it when the market's too neat. So it's too obvious here that you buy gold. I'm slightly worried because technically this is spiked. It's made a high. It's come back down again, and that's on its own suggests that the market has panicked, and panicking is not a good sign to be trading. So it's slowly recovering this. So we'll have to wait and see if it can take this high out. Then I feel much better about a longer term trend or our long term targets coming into play. Silver is a bit more muted. Again, as I mentioned in the weekly, it's hit this trend line and it's trying to break it. And it looks like it might have a stronger go this week. But, I really like silver long term. I think it's going to be a great buy. But it's just not quite done what we expected. It's not really sort of performing as in any outstanding way. So I think maybe one more correction to shake people out, and then we'll be off to the races. So people are going to be starting to look at taking their money out of fiat and putting it elsewhere. Now, I think this still does benefit the cryptocurrencies. And yes, we have seen a correction in Bitcoin, but considering where we were last week, this is a really good rally. It's a fantastic rally. And as long as we can hold this week over this 40,500 to 39,576, which we've talked about many times, so good support in that zone, that would be a really good sign. Now, what we really need overall is for this 46,700 level to be taken out, which is the long-term moving average. So this is creating what I think is a really nice double bottom. So we've got one, then two. If we break this, then it's a really good buy signal. Now, even if we get that buy signal, I don't think it's off to the races all the way back up to 69,000. I think it would just go up, trade towards this 54,000 area, and then come back down, and we'll just see a sideways range for the coming months, and then we'll get this build up and then a breakout. So for me, as long as this wasn't in a dive, creating a massive double top, I was willing to err on the side of being bullish Bitcoin and other crypto assets. So it's done its first leg of it, also hit that Fibonacci support absolutely bang on. So yeah, it's had a good rally, and anyone who bought it from a short-term perspective is going to want to take some profits. So it's highly, understandable that they've seen this rally, taken some profits. But I think where it goes now is really important. So I don't want to see it cross back below this 39,576. It should stay around here. You have to remember we're going into the weekend, and what often happens is, as there's fear over the weekends, especially with what's happening in the world, there become fewer and fewer assets to hedge your positions with. So it could take the brunt of selling, or people not wanting to just hold any positions over the weekend. So Fridays, I think, we'll see a bit of we're seeing a correction already. They were selling ahead of it, so we might get a little bit more. But then hopefully over this weekend, it will stay relatively stable. And then at the beginning of next week, we'll see the trend move back up. Similar situation with Ethereum, although it is not looking quite as bullish as Bitcoin. So if you can see what was a potential double bottom where I've got the X here, that is where Bitcoin is. Ethereum is underperforming. So I'm not sure what that's telling us here, because it's a better technology. And also the moving averages are turning down and have crossed over. So there will be some algos that would sell just based on a crossover. So this is looking a little less promising, but I still would like to err on the side of the bullish strategy. So as long as it can stay over 2,700, which is pretty much where it is now, I would be willing to hold a bullish view. Now, I would go neutral below 2,700, and I would start to turn bearish if we head down towards this spike low. So if we draw a line across here, if it's heading towards this where this spike is, or sorry, where this cross is, then it's going to start to look like what's called a descending triangle, and that would not be good. It would really be it would start to turn potentially very bearish, and we'd be looking at levels down at this 1,728, which I don't want to call for the moment because it doesn't warrant it. We've seen a good rally. It's a bit muted, could have been better, but it's still raised from this low. So that panic low has been reversed. And as long as we can consolidate around these levels, that would be a good sign. So the levels it needs to take out on the upside, 29.51, and then above that, this 33.23, that's a really big level. And that would be great because it would create a double bottom and it will push it into a sideways consolidation. But there's still a bit more work. We got like phase one of the recovery in crypto assets. I've heard other people now talking about on other channels about how they think crypto assets will benefit from this situation. So it seems like people are cottoning on to that view that potentially a good place to put your money. And you mentioned the Canadians. If I was a Canadian, I'd be thinking, well, if the government try this now, what might they try later on? And it, again, increases the potential for these crypto assets as an alternative to fiat, and also as an alternative to gold or silver. So an interesting market, a volatile market, but as far as the crypto assets are concerned, I'm going to try and hold a positive view. Long term, anyway, that stands, but it's whether the short term and the medium term stay positive. But at the moment, the technicals are looking relatively good. Any final thoughts from you, Manu?
No, I agree. I think it's one of those wait and see moments. You know, I think a week ago, I believed this was going to be a bit of a blip in the curve, and that blip has become much bigger and uglier, and I'm not sure how this is going to play out. So I think understanding what this does from a geopolitical and macro level will give us a bit of understanding as to how this plays out, I think, in the crypto market. I think maybe the reason you're seeing the rally slightly more pronounced in Bitcoin than ETH is maybe this is looking beyond the tech, and maybe this is looking maybe at protecting assets and protecting value, basically. And if that's the case, that kind of begins to be the point in time where you see a decoupling of Bitcoin from the equity markets, which we were all expecting to happen at some point anyway.
Yeah, absolutely. Brilliant stuff. Well, thank you so much for watching, and we will catch you next time.